Alright, happy Monday, everybody. It is June 10th, 2024, here at PreciseAlgorithmTrading.com. I got a lot to cover, but I'm going to try to do it quickly. So we'll start right here at the top with our automated trading systems, like we always do. So I mentioned this on Friday, and this is the Dow Futures, the YM contract. And our old system, which we were trading until last week, has all this back and forth and just total chop for, like, I think this is a 4 month period now. And I was thinking, hey, this system here, yes, it has its drawdowns with, when it pulls back, it pulls back, but it's not as deep. And I thought, well, this is the NASDAQ. If I applied the same math to the Dow, what would I get? Plus a little, it's not all exactly the same math. It's the same um, principles, but then you modify the moving averages and things like that to meet the instrument. And but you see that you get the same kind of an equity curve. And this is actually off of 1,000 ticks, and yes, that was this. But the old Dow was actually off of 1 minute bar. So I'm considering doing some more work to come up with this on a 1 minute bar, because I think we'll actually um, the the trades would more mirror what was going on before. But I'm totally fine with this actually as an equity curve, and with the potential it has in it, because it's the same thing. It doesn't have that big of drawdowns before it goes on to make new highs. And this is the standard 6 month chart. The chart that I was building it off of actually had or had more data, back data included. So, anyways, that's a big deal. I'm actually my next thing, I'm probably going to apply it to the Russell here, because I just hate this kind of a drawdown period. So, I totally fine with having some drawdown, but this is just too crazy. And I don't think that's even possible when you add in the stops that are baked in to this and the Nasdaq futures. So more to come, but that's my most recent project. So let's look at individually. So here's the Dow futures, and so today there was only one trade, and you can compare that. I didn't actually even bring down the individual trades for this one, just because, like I say, I'm sort of done with it. But the same reason I've been looking at the Nasdaq, the the new system, and looking at the individual trades. So it had a lot of stop outs. It had 5 stop outs today, which is kind of like no big deal. Now you can compare that to this system, which had this giant drawdown, which is totally still a viable system. Um, and yeah, this system today actually had some pretty nice gains in it compared to 5 drawdowns, or five stop outs. But if we look here, this is today's trades. So it's actually, it's a little bit of a trade-off, but I'm still going really for the better looking equity curve. This is psychologically better just for me. So, and trading it's a mental game as much as it is anything else. So that's some of that is what we've been up to here, and I'm going to keep going. The actual markets themselves. Here's the S&P 500. So the S&P, I think the markets overall went up today. So the S&P went up 13 points, or 0.26%, which is next to nothing. The Dow went up 69 points, or 0.18%, which is not really much either. The Russell, we'll look at the IWM, went up 0.34% today. I had a position on an IWM because of this target up here, and it got stopped out, which is fine. I'll get back in when it makes sense. And SPX, the NASDAQ, I think is still reaching for this 1618. For what it's worth, NVIDIA, I think still is climbing. Look at that sucker. Well, that is a big blow off top candle, isn't it? It went up 0.91%. Did it? I wonder if it really got up that high today before it pulled back. I wonder if there's a story there. I do know that, well, maybe that's that split. Yep, that's that split. So that's just weird pricing. I'm sure they just had to be able to put it on the chart somehow. So now NVIDIA, instead of, you know, $1,095 or $1,950, it's $195 a share. Or actually, it's probably $121 now. I said all that. I'm sure I said something wrong in there, but I just wonder if it ever got up to this 1950, which would be 10 times this high. So, anyways, it split 10 to 1. It's going to be more tradable for more folks. Just be careful after a split. I've seen prices go back down because a lot of people are trying to jump on the bandwagon, and the market just loves to do the opposite of what the most people want to do. So that was. Did we look at the Nasdaq? So yeah, the Nasdaq was reaching that new or that 1618 retracement or extension, I should say. And the transports today actually popped pretty good. IYT, where are you? I'll just put them in over here. Except they're doing it from the bottom, obviously. Alright, nothing really to do there that I see off the cuff. Oil. It's coming up to that, possibly to break that trend line, that downward sloping channel, break into the upside, but potentially be a new trade to the upside. And for what it's worth, I'm going to, these labels up here across the top, I've been working with the Ichimoku Cloud. I've worked with it for a long time, but I've got some clarifying things going on in it. I'm adding it, features of it, to our system, and I'm trying to decide, and I'm going to marry them up is really what I'm going to do for better entries and probably better stops. So, I mean, if I get an entry on the Simple 30 system, and it marries up with the entry on the Ichimoku, then I'm going to take it. If it's just one or the other, I'm probably going to pass because there's ample opportunities most days, and both systems have clear entry and exits, and when they marry up, you get really nice trends. So there's going to be more to come on that too, but anyways, so I'll look at a couple of other things. Here's bonds, which was looking like it was going to take off. Now it's pulled back. And we'll keep going. Gold, GLD. Also looks like it's on a pullback. And we'll see what comes of that. Big gap lower the other day, which kind of makes me think that this major uptrend is over, at least for a while. Okay, I think that's all the major hitters. I guess we could look at all the new fun things like Coinbase and the Bitcoin tracking ETFs. Yeah, there you have it. So I'm going to go diverge a little bit here. We're going to look at the VIX. We're going to put the ES back here. So the VX is, or sorry, the VIX is back in the low zone between the Bollinger Bands, and this is the daily chart of the ES. I still actually think we're more vulnerable to the downside than the upside, just because we had such a big move before, back really last year at this point. Big move down, pretty big move back up, and now I mean, basically all that volatility unwound both directions, and now we're really just getting tighter on volatility. And when the volatility slows down like this, yeah, we can climb for a while, but when it does release, it's going to release big again. It's just something on the horizon. I'm not saying it's going to happen like right away, because we've got an awful lot of, like, the uptrends are up. So I did want to hit on this, and this is the uh, Ichimoku cloud that I've talked about plenty of times, and I'm doing some. It's not studies; it's really some analysis based on the cloud. That's really what these um, labels are up here in the corner, and I'm just going to when they line up, and maybe not all the monthly and the weekly, but when the dailies all line up, then I'm going to be more likely to take a trade. This is all the markets put together, all the major indexes. Um, and you can see that I still have the simple 30 color bars going on here, so you can see them kind of coming together. But for instance, today Urban Outfitters looked like a really good trade on the simple 30 system, and I'm not saying it's not, but the lagging indicator, the lagging line, the Chiku spawn, is under the cloud, and in order for the whole system to be um, totally married up, then the Chiku spawn is going to have to actually go above the cloud, and I think it's going to happen probably soon. So yeah, we could jump in here, we could set our stops, we could be aggressive and not wait on that, but going forward, I really want to have more odds in my favor, so I'm going to wait. And I don't think this thing's going to run away with me or without me, or at least it won't run too far. But something else that the cloud gives me is really nice, clear stops. And if these all line up, my stop just becomes under the cloud on the given day that they all marry up when all the signals come together. Which, by the way, I've got these little arrows coming when they all marry up together. And since I've got the green bars going on and the red bars, you can see when they're basically when the systems are married up together. I say all that, and then these green dots are targets based on where the cloud is and what your risk is to get 2-to-1 risk reward ratio. So this is just an example for Urban Outfitters that I'm waiting, and I actually think the price can come up and then pull back because we got this dip right here in the cloud, and I think during all that the Chiku spawn actually could go up. And I'll just call it the lagging indicator. I know I learned all this stuff with the Japanese terminology, but I probably will go back and forth on that just out of habit. Okay, so that was that, and then what else did I have here? Oh yeah, the same. We could go back to slash ES plus slash RTY plus slash YM plus slash NQ. And you can see all that together too. So I think actually looking at the markets together like this is pretty beneficial with a lot of context going on. And then finally, let's go to stockcharts.com, look up point and figure charts, look at the bullish percent indices, and so the Dow didn't move today. The NYA moved down 1.85% and added on a new O to the downside. The transportation index didn't move. The NASDAQ down 1.16%. The S&P 500 down 1.04%. The S&P 100 didn't move. And the NASDAQ 100 didn't move. So I also want to be really aware that the NASDAQ and the S&P 100 both just recently moved to a column of X's. And that's going to keep my eye pretty hard on the S&P 500 to flip to a new column of X's, or the NYA to flip to a new column of X's. But right now everything is just so in chop that I'm concerned that if I start jumping in like too bullishly, I think this thing's going to roll over and it's going to punish me for doing so. And right now I can just be a little more cautious until everything kind of lines up. And I might miss a little bit to the upside, but I think it's worth the caution at this point. So that's what I got. I hope it helps. Take care, guys. Good trading, and have a great night.